Guys, this is S&P 500 weekly technical analysis for the week of June 23rd. In my previous S&P 500 weekly technical analysis, I have again and again I have mentioned that the confluence zone, any fall, any kind of fall will be limited, will be handled by the confluence zone irrespective of anything. Only on the Wednesday, there will be chances that the S&P 500 may lose the confluence zone. However, after the SEPs were released, the S&P 500 gave no good bullish or bearish movement because the SEPs were neutral because the Feds are still expecting two rate cuts. And then in the press conference of the Federal Reserve Chairman, okay, I mentioned this to my Patreon committee members, okay, after 15-20 minutes, that now chances are less that he is going to say anything that can make the markets worry. Okay, the US stock market, the Wall Street. This means that now the S&P 500 is going to trade in between the confluence zone and the 602x. Very simple. And it was not just on the Wednesday but also on Tuesday. I mentioned again and again repeatedly to my Patreon committee members that any fall, any kind of fall will be handled by the confluence zone. Doesn't matter whether it's a surprise fall or a normal fall or any kind of fall. Similarly, yesterday also, again I have mentioned to my Patreon community members in the midday update that the S&P 500 is going to trade in between the confluence zone and the small zone in the bull side for the entire day. Even if the S&P 500 loses the confluence zone, then most likely it is expected to recover. Very simple. So in the entire week we have seen that again and again the S&P 500 was holding, sustaining, trading and closing at or above the confluence zone. This is why the S&P 500 is safe and S&P 500 is still bullish. And also, as of now, there will be no heavy fall until and unless the S&P 500 loses and closes below the confluence zone on the daily basis. And also in this case, we need two consecutive closings below the confluence zone. Once that happens, in that case there will be heavy fall. But what will happen to the bull side? On Monday, S&P 500 came into open equal to low condition. This was the very first confirmation that for the entire day it will remain bullish. Then it tried to move up and the high was 6051 only, and once again it has failed. It has failed to hit and to test the 606x, just like what we have seen on Wednesday 11th of June. But because the S&P 500 was holding in the open equal to low condition, this is why I mentioned in this the midday update to my Patreon community members that now the bearish side, the support is at 602x. Okay, S&P 500, any intraday fall will be handled by 602x, and the bull side will remain limited to the 606x, and the 604x will act as the tiebreaker. And then in my midweek update to my Patreon community members, again the same, the confluence zone. Above the confluence zone, the maximum it can try for is 606x, that's it. And if there comes any intraday fall in the confluence zone, then that will be maximum up to 593x, but with a condition that it will recover back to the confluence zone. As simple as that. So now I hope you understand the importance of the confluence zone. As long as confluence zone is holding and sustaining and the S&P 500 is sustaining and closing at or above the confluence zone, there is no fear of or any fall. Rather, the S&P 500 will remain in the bullish condition. However, on Monday now we are expecting a bearish movement, an initial or intraday bearish movement, and also there are chances that there will be a gap down open. If there comes one closing below and if there comes two successive closings below the confluence zone, then there will be a short-term trend change. So I am going to discuss all of this in detail in this S&P 500 weekly technical analysis, which is for the week of June 23rd. Means from June 23rd, which is Monday, through June 27th, that will be Friday. So now guys, let me tell you that I have divided this S&P 500 in three parts. First one is the weekly chart, second one is the daily chart, and the third one is the probable movement. Okay, so I will begin with the weekly chart. Weekly chart means the long term picture, the trend. Daily chart means the short term picture. Okay, why I am saying a gap down open or irrespective of any open and initial or intraday bearish movement. Third one is the probable movement. Probable movement means what is going to happen. So last time I mentioned maximum to the 606x in the bull side. Okay, and any fall will be handled by the confluence zones. So guys, when I say the probable movement, this does not mean that this is the entire movement up, down, okay, or rejection or the support. I'm going to discuss only in this the third point. No, by the time I come to discuss the third point, I would have already discussed 30 to 40% of the probable movement in the first and the second point, the weekly and the daily chart. That is why it is recommended that you should watch all of these three sections in order to understand what is going to happen in the S&P 500 in the next week, means the week of June 23rd. Now guys, this is the weekly chart. Okay, weekly chart means one candle represents 1 week, not 1 day or 1 hour. Okay, one candle means 1 week. Okay, now let's first discuss the candle. It's a very important candle. Okay, see, there are two consecutive red candles, two consecutive red weekly candles. Okay, now as such they should trigger more fall or more bearishness in the S&P 500. But if you notice the previous candle, okay, this candle that was for the first week of June, then that was a heavy bullish candle, and these two bearish candles have closed above the high of this candle. This was 5958.38 and the last closing is 5967.84. This, the candle pattern is going to help, is going to save the S&P 500, and the confluence zone in this manner will help the S&P 500 to not to fall. Okay, so the candle is indicating an initial or intraday bearish movement on Monday. However, it does not indicate a gap down open. Okay, so when we consider or when we analyze the S&P 500, then it looks like, okay, everything is under control, everything is good and fine, there is no problem. But there is a problem. That problem is in the Dow Jones. Now this is the Dow Jones. Okay, so there is not just one problem, but there are multiple problems in the Dow Jones. Okay, what kind of problems? Bearishness or heavy bearishness or extremely heavy bearishness through the Dow Jones. Okay, now let me tell you these problems one by one. Okay, so guys, this is a reason why I always consider the Dow Jones, because S&P 500 is a pure S&P 500 and the Nasdaq are the pure tech indices. Okay, the majority of the weight is in the tech stocks. Okay, that is why we cannot get a clear picture through the S&P 500 and Nasdaq alone. Okay, this is the reason why I always analyze the Dow Jones. Now, what kind of problems? Number one, there are two consecutive closings inside the Ichimoku cloud. Okay, for the first week of June, the Dow Jones closed above the Ichimoku cloud. It was supporting bullishness, but there were no two consecutive closings in the Dow Jones. That was the problem. But now there are two consecutive closings inside the Dow Jones. Okay, this is one problem. This is indicating that Dow Jones is not in a good shape. Okay, Dow Jones is in a condition wherein it can give more fall, and if you notice these two candles of the Dow Jones, it is indicating a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. Okay, this is the first problem. The second problem is, if you notice the moving averages so far have not given any bullish crossover. In last I think 3 or 4 weekly technical analysis, I have repeatedly mentioned that if the slip has to be formed, a bearish slip has to be formed, then there are very good chances that it can form in the Dow Jones. Okay, there is no confirmed crossover in the Dow Jones. Dow Jones is struggling. Now, if there comes a red candle in the next week, okay, a good red candle or even a normal red candle, remember I'm talking about the weekly chart. If there comes a good red candle in the next week, then most likely we will see the initial sign of the slip, means the moving averages which are now converging, this moving average will then start to diverge. Okay, once there comes a diversion in the moving averages, then we will anticipate a good and a heavy fall in the entire US stock market, and also this will trigger a short-term trend change, okay, short-term bearish fall, okay, bearish movement, okay. So this short-term can trigger a fall in the S&P 500, okay. Initially it will be the zone that will handle the fall, that starts from 585x. This is a very strong support zone. Losing this zone means we should be ready for 5,300, okay. This 5,300 is due, right? So problem is in the Dow Jones. So Dow Jones is indicating gap down or irrespective of any open and initial or intraday bearish movement, okay. Number 2. Number 3, the Dow Jones is indicating that if all goes well, in that case the next candle, next weekly candle, remember this is the weekly chart, okay. So the next weekly candle of the Dow Jones will be a red candle, a red weekly candle by the next Friday. Friday will be 27th of June. If all goes well, then there will be a red weekly candle. It may or may not be heavy, but the most important part is that there will not be any confirmed bullish crossover, okay. That is the problem. So these are the reasons why the Dow Jones is creating an extremely heavy pressure on the S&P 500 and also on the Nasdaq, okay. Now this was through the candle, okay. Now let's talk about the technical indicators. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, in terms of the technicals, what we can see here is that S&P 500 is bullish through the moving averages on the weekly chart. S&P 500 is bullish through the Ichimoku cloud on the weekly chart. S&P 500 is bullish through the Bollinger Bands on the weekly chart. S&P 500 is also bullish through the MACD on the weekly chart. S&P 500 is bullish through the stochastic RSI on the weekly chart. And as of now, it is neither overbought nor saturated, okay. There is no problem. So on the weekly chart, the S&P 500 is 100% absolute bullish, okay. The problem, see, the long term, as of now, S&P 500 is in the long term bullish trend, okay. But in this the long term bullish trend, it has changed, okay, into this the long term bullish trend. The only problem is that it is expected to come into the short term bearish trend, okay. And if there comes heavy fall, in that case the short term bearish trend will then change into the long term bearish trend. But this exercise, okay, it will take some time, okay, around 2 to 3 weeks a minimum, okay, to change the trend. And if there comes a heavy fall in the Dow Jones, then within 2 weeks, okay, we can see this the change in the S&P 500, the long term trend change. Now the Dow Jones. So technically the Dow Jones is in the problem, okay. Now through the technical indicators, Dow Jones is neutral through the Ichimoku cloud. Dow Jones is bullish through the moving averages on the weekly chart. Dow Jones is still bullish through the Bollinger Bands. Dow Jones is also bullish through the MACD on the weekly chart. Dow Jones is bullish through the stochastic RSI on the weekly chart, okay. So through the technicals, the Dow Jones is or will be seen or considered as 80% bullish. This means that there is no problem to the long term trend, okay. Long term trend, especially the bullish trend, okay. Through the technicals there is no problem. But when you analyze the candles or when you look into the candle pattern, then definitely 100% there is a problem, okay. The problem, there are 3 problems that I have mentioned, okay. Now candles will override, okay. There is a condition that candles always override the technicals, right? So 80% bullish, and Dow Jones and the S&P 500 is 100% bullish on the weekly chart. This means that any fall in the entire US stock market is expected to be limited. When I say the limited, then this means the confluence zone in the S&P 500, but I'm afraid that on Monday S&P 500 may lose the confluence zone, okay. So if you're my Patreon community member, then in the pre-market analysis and in the midday update, I will confirm if this is happening or not. Because if this is happening, then there is no reason, okay, why you should go bullish. In that case, it will be all bearish. Okay, simply a fall. And 80% means the Dow Jones still has chances that even if there comes a fall, then also it can sustain, okay, or it can try to recover, try to go bullish. But again, there is a problem, okay, the same problem. It tried to move up in the bull side of the Chimoku cloud, then failed, and then it tried to move again, then failed. Okay, so this means that the situation is not good in the Dow Jones. So whatever fall will be there in the entire US stock market, this fall will not be because of the S&P 500 or the Nasdaq. This fall, this bearishness will be because of the Dow Jones, only and only because of the Dow Jones, the gap down open or the weekly red candle, only and only because of the Dow Jones. However, guys, you need not to worry about this, because whatever is going to happen, I will keep you posted, I will keep you updated through these daily precise updates of the S&P 500 and the Dow Jones, okay, or in a manner to the entire US stock market. So I give the pre-market analysis before the open of the stock market. Then I give the midday update after 3 hours. Okay. Then I give the final update 1 or 2 hours before the closing of the stock market. In this manner, my Patreon community members are very well aware of intraday movement, levels, zones, everything. However, that's not all, because I also give the stock market opportunities in the premium stocks of the US stock market, top 30 or 40 companies of the US stock market, the blue chips. Okay, so I gave 5 to 10 opportunities every week through this, the stock market opportunities update, okay, to my Patreon community members. And that's not all, because I also give the midweek update, the video technical analysis, and I discuss all of these the cases, okay, and I confirm whether there will be a fall or bullish movement or bearish movement. Okay, so in this manner, my Patreon community members are very well aware of each and everything, the movement of the S&P 500, what is happening and what is going to happen next. So guys, whenever you want to join my Patreon community in order to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market, then I've given the link in the description of the video and also in the comment section. And guys, when you follow that link, then you will see that this is my Patreon profile and this is my Patreon page. And here you will notice the C membership options. So when you open this, the C membership options, then you will notice there are 3 levels, level 1, level 2 and level 3. Now the level 1 and level 2 are same, the only difference is in the geographical location. So when you subscribe either to level 1 or level 2, then you will be getting all midweek update videos every Wednesday or Thursday, okay, the video technical analysis. Then the daily SP500 analysis updates, movements, levels and zones. And then the stock market opportunities 5 to 10 every week. So all of this you are going to get through these two. Now this level 3 is a little different, okay, and it will give you much more than what you can expect or what you can anticipate. Because whatever you are going to get here, by default you are going to get here, okay, in this the level 3, but also through the one-on-one Zoom video meeting. One-on-one Zoom video meeting means just me and you. I will teach you, I will tell you entry and exit secrets, when to enter, when to exit, okay, the secrets. One premium hack, okay, this hack has very high accuracy, okay, that you might not have seen or heard of. One trading or options strategy, okay, again this strategy has very high accuracy that you might not have seen or heard of. Then the modified technical indicators, so I'm using the technical indicators that I modified in order to predict the movement even before it is seen or it happens. I will share that, okay, with you. Then the options premium calculator. Okay, so more than 97-98% of the traders who are trading in the stock market, they do not know how to calculate the options premium value. Okay, so and they are trading blindly. So that is why here I will give you the options premium calculator, or I will teach you how to use or how to calculate the premium value of any option and how to predict the past, present and future of any option. Okay, so all of this will be through the one-on-one Zoom video meeting. In this manner, you are going to get much more than what you can expect or anticipate through this the third tier or this the third level. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday. So guys, whenever you want to join my Patreon community in order to get the same, okay, everyday updates, precise updates, then I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community and you are welcome. Now guys, I am going to discuss the daily chart section, okay, of the S&P 500 and the Dow Jones. So daily chart means that one candle represents one day, not 1 week or 1 hour. One candle means one day. Okay. So now let's first discuss the candle, and it is very, very important. So the candle says, if you notice, 1, 2, 3. 3 candles have closed below this one moving average. Okay. Now this closing is very important because these 3 candles are also the bearish candles, and then the closing is below the moving average, indicating a gap down open on Monday, a gap down open, or irrespective of any open, there will be an initial or intraday bearish movement will be there. But even if the bearishness is seen, then also S&P 500 is in a condition to get a retrace, to get a reversal. This is something very, very surprising. Okay, so I will show you this in the next part, the probable movement, that why even after getting this, or even after seeing this, the heavy bearishness, why still we are expecting a reversal. Okay, so gap down open or irrespective of any open and initial or intraday bearish movement on Monday. Now the last daily candle of the Dow Jones, if you notice, again back to back, 1, 2, 3. Okay, these 3 candles, this candle has closed below the moving averages. Okay, otherwise these two has managed to sustain at the closing at the moving averages. But the concern is actually the pattern is the problem. Okay, the pattern in the moving averages is a problem, because this pattern is indicating a gap down open on Monday, or irrespective of any open, there will be an initial or intraday bearish movement on Monday. There is no condition, nothing that can help the Dow Jones to get a bullish retrace, okay, which is there in the S&P 500. Okay, so how exactly this is going to work? See, you need to understand the structure of the S&P 500 and the Dow Jones. Okay, Microsoft and Apple, especially the Microsoft is the most important component of the S&P 500 and the Dow Jones, and have very heavy weightage. Okay, if the Microsoft sustains and the other tech indices like Nvidia and other tech indices, tech stocks sustains and try to move up, okay, but at the same time in the Dow Jones, the Goldman Sachs and the United Health Group and the Home Depot, which are the primary contributor to the Dow Jones, okay, trades bearish. In that case, S&P 500 will sustain and survive, and the Dow Jones will not be able to sustain, it will trade bearish. This is how we will see a very different movement in both of these, the indices. Okay, so this is the reason why we should know the structure of the indices, okay, and then the candle patterns, okay, and then the technicals. Okay, so I hope this is clear, that through the daily candle, yes. So through the daily candle on the Dow Jones, we are anticipating a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. This is now very, very much clear. Okay, and also I have told you that how the movement will be different based on the movement in the primary contributors or the components. Okay, now let's analyze the technical indicators. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire stock market, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, in terms of the technicals, what we know is that the S&P 500 is neutral through the moving averages on the daily chart. S&P 500 is bullish through the Bollinger Bands on the daily chart. S&P 500 is bullish through the Ichimoku cloud on the daily chart. And the S&P 500 is bearish through the MACD. MACD is moving average convergence divergence. It is bearish through the MACD on the daily chart. And also the S&P 500 is bearish through the stochastic RSI on the daily chart. Okay. Now the most important part is that the MACD and the stochastic RSI both are bearish on the daily chart. This is going to put bearish pressure, a lot of bearish pressure on the S&P 500. But again, the confluence zone is there to hold the fall, to handle any fall, and it is supporting the S&P 500 for last many days. Only the confluence zone, otherwise there is nothing that can help the S&P 500. So in this manner, the S&P 500 will be seen or considered as neutral on the daily chart. Means the S&P 500 has now come into a condition wherein we can expect a short-term bearish trend. Okay, but again, for the short-term bearish trend to happen, the confluence zone must be out of the picture. Means there must come two consecutive closings below the confluence zone. Once there comes two consecutive closings below the confluence zone, then there will be a short-term bearish trend. Okay, if this continues for next 2 weeks, remains bearish, fall and fall, then in next 2 to 3 weeks the weekly chart will also turn bearish. In that case, this will be the resumption of the fall, okay, correction and the recession. Okay, now let's analyze the Dow Jones. And also there was one good thing that the Feds in the SEPs, okay, recent in the FOMC meeting, the Feds have not mentioned the recession word, okay, which they have mentioned earlier in the previous FOMC minutes of the meeting. So that was a relief to the stock market, to the Wall Street. And also in the press conference, okay, the Federal Reserve Chairman has not indicated, okay, any of the thing. However, he was concerned about, okay, what is going on, okay, in the world, and then especially the tariffs. The impact of the tariffs is still to be felt, and this is indicating a reversal, a bullishness in the PCE, core PCE, or bullishness in the inflation. Means either there will be a stagflation or, okay, the bullishness in the inflation. So that was the problem. Anyways, let's analyze the chart of the Dow Jones. Now in case of the Dow Jones is neutral through the moving averages on the daily chart. Dow Jones is bearish through the Bollinger Bands on the daily chart. Dow Jones is bullish through the Ichimoku cloud on the daily chart. Dow Jones is bearish through the MACD on the daily chart. Dow Jones is bearish through the stochastic RSI on the daily chart, and this is a problem. The Dow Jones, that the MACD and the stochastic RSI here, in case of the Dow Jones, are both bearish. Other than that, the only positive thing is the Ichimoku cloud. Otherwise, Dow Jones is in the pressure. And the most important part is that the Dow Jones has not hit the absolute saturation, which we can see in the S&P 500. That is what is going to help the S&P 500 in the next week, especially on Monday. So now the Dow Jones will be seen or considered as again neutral. Okay, neutral in the bearish side and indicates short-term bearish trend. Okay, it is there. Okay, so now we have seen both of the indices, the Dow Jones and the S&P 500 on the daily chart are neutral, okay, and are turning bearish. Okay, and other than that, the MACD and the stochastic RSI both are bearish. And if you are new to my YouTube channel, then in last many months, years, again and again repeatedly I have mentioned, whenever the MACD and the stochastic RSI are aligned in a particular direction, then that direction becomes the direction of the stock or the index or whatever is traded in the stock market. Okay, but then why it is not triggering a heavy fall? Because on the weekly chart, the MACD and the stochastic RSI both are bullish. Okay, so that is why whatever fall we are seeing here, it is normal and it is limited. Okay, that's the most important part here. So once again the confluence zone comes into the picture. Okay, the confluence zone is going to help the S&P 500 to sustain. Other than that, the absolute saturation, not absolute, but the saturation, early saturation is seen in the S&P 500. okay, confluence zone plus the early saturation. This combination can help the S&P 500 and probably the Nasdaq also to sustain and to trade bullish. But this bullishness may be for one day or maybe for more than one day. Okay, it will depend on the movement. So this is how through the technicals we can anticipate and we can figure out the movement and everything. Now guys, before I discuss the probable movement, I have this information to share with you that this is my S&P 500 knowledge transfer program. Means whatever I know, whatever I have learned, okay, last many years through my research, through everything, whatever I have learned, I am going to teach you through this S&P 500 knowledge transfer program. Okay, and when I say the S&P 500 knowledge transfer program, means whatever you are going to learn here, okay, through this program, then it will be applicable to any stock, any index, crypto, okay, commodities, or whatever futures, ETFs. Means whatever is traded in the stock market, you can use the same principles, logic, the technicals, everything, and it will work for the stocks, commodities, and everything. So here I have this level 1, level 2, level 3, okay, and I'm going to teach you the market from the basics to the advanced. Then I will share with you my modified technical indicators, and also I will discuss each and every technical indicator in detail to help you understand that how you can use each and every technical indicator, okay, differently, and you can figure out the movement, okay, or what is expected to happen, each and every technical indicator. And also I will help you set up your charts. Then the trading strategies, the precise, okay, these trading strategies have very high accuracy, okay, although you might have heard about these trading strategies, but I will tell you that how in a different manner you can use so that you can get the maximum out of it, okay, through these trading strategies. Then the market analysis, how to analyze the market, where to get the credible information, okay, how to avoid falling into the traps, etc. Then comes the options, okay, all of the options from basics to advanced, and the options premium calculator, live premium calculations, okay, I will teach you all of this. Then the support and resistance levels, okay, I will give you the support and resistance levels, and you know that my support and resistance levels are different from what you are seeing in the market. The confluence zone that I have mentioned again and again, okay, you will not find it through any technical indicator, or no one will be able to tell you about this, the confluence zone, but through these, okay, it is there, and it is helping the S&P 500 to hold and sustain. Price prediction, how to know even before it happens. For example, I have predicted that 614x will be the all-time high of the S&P 500, and this is something that I have predicted in last October 2024, and then we have seen in February 2025, 6147 was the all-time high. Recently, I predicted that any bullish movement, continuation of the bullish movement, will be limited to 606x no matter what. And we have seen that 6060 was the high, okay, during the recent bullish movement. Okay, so how to predict the price? Then the trend, how to analyze that trend? Okay, how to analyze the trend change? Then the how to recognize the manipulation in the market, and how to save yourself from avoid getting into the manipulators, okay, the trap. And then these hacks which have very high accuracy, okay, and you might not have seen or heard about the hacks. And guys, these are some basic terms and conditions, and these are the snapshots of the meetings. So guys, whenever you want to participate in this program, or if you have any questions that you want to ask, okay, then in that case, this is my email address I have mentioned here in the Google spreadsheet. You can simply send me an email, and also I've given the link to this Google spreadsheet in the description of the video and also in the comment section. Now guys, I am going to give you the probable movement of the S&P 500, Dow Jones, and in a manner to the entire stock market, okay, for the next week, means the week of June 23rd. So means from June 23rd, which is Monday, through June 27th, that will be Friday. Okay. So now what we know here is that, okay, first of all, before I discuss the numbers and all, you need to understand that on Tuesday and Wednesday, okay, the Federal Reserve Chairman is going to testify to the Congress and to the Senate. His testimony will create heavy volatility in the market, especially on Tuesday, because then on Wednesday there won't be nothing much, okay, that will be left. So on Tuesday it will create heavy volatility. Then on Thursday, okay, the GDP data, or the goods and the retail sales data on GDP on Thursday. Finally, on Friday, the PCE and the core PCE data. Means the next week will be heavily volatile. But the most important part, okay, the most important thing that will heavily fluctuate the stock market in the next week is or will be Tuesday. This means that on Monday is blank, Monday is this. Means the stock market, the S&P 500, the Dow Jones and Nasdaq, they have Monday. These indices have Monday. Means if the index or if the stock market want to go bullish, then they have the Monday. Okay, Monday they can utilize. Okay, now we are expecting a gap down open. Okay, on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. So it doesn't matter whether to what level the gap down will be there, or initial or intraday bearish movement, but as long as S&P 500 is holding and sustaining above the confluence zone, no matter what, S&P 500 will hold and sustain and will remain in a condition to go bullish. Okay, this logic, this version will be applicable for the entire week. That is why again and again to my Patreon community members, I have mentioned the confluence zone every day, that whatever fall will be there to the confluence zone, and then there will be a recovery from the confluence zone again and again. Now there is one more thing that is actually in favor of the S&P 500. This is actually the stochastic RSI, which has hit the initial saturation through the K channel. Okay. Now, whenever there is a bull trend or the bullish trend and the K channel hits the absolute saturation in the bearish side, then we need not to wait for, generally we need not to wait for the absolute saturation, means the D should also become zero. No, because the K itself is more than sufficient to trigger a bullish movement. Okay, so now there are these multiple factors. Okay, the very important thing is the confluence zone itself. It is there, confluence zone, and then comes the stochastic RSI, which has hit, means the K channel of the stochastic RSI hit the initial zero. Both of these conditions indicate that if there comes an open at or above the confluence zone, then most likely or highly likely there will not be any fall, rather we can see a green candle on Monday. Okay, a bullish movement on Monday. The question is that if this bullish movement will be there, then to what level it will be there? Very simple. Okay, any bullish movement for now will be limited to the 6,000. Okay, in the 6,600. Okay, this is the range. Okay, any bullish movement will be limited to this thing. This is my calculated level. Okay, and when it is combined with the 5,909x, okay, then it becomes a good zone. Okay, initially it will be limited to this, the small zone. Okay, once the zone is captured, whether it happens on Monday or Tuesday, Wednesday, whenever it happens, see, first of all, what we know is that as long as S&P 500 is holding and sustaining above the confluence zone, it is bullish. No matter what, it is bullish. Doesn't matter whether there is a fall or red candle, doesn't matter. It is bullish. When it is bullish, then to what level it can retrace, or what zone it can retrace? This is simple. Okay, to this zone. Okay, this is a very, very small zone. Okay, here. Once it is recovered, then it becomes it comes into a comfortable bullish condition. Okay, wherein it will be heading to 604x, 6,400. Okay, 6,004x. Okay, this is the range it will be heading to. Before that, there is an intermediate at 602x. Okay, but that won't matter unless the bullish momentum is low and dull, because if the bullish momentum is low and dull, then the 602x will restrict the bullish side movement. Very, very simple. Okay, now so again you need to understand, okay, the principle, okay, that I mentioned in the last week also, it will remain in the picture as is. There must comes one closing above 606x, this level. There must come at least one closing above this level, because once there comes a closing above this level, then the next day, means the second time S&P 500, okay, it will not be struggling much. Okay, there will not be any conditions which can say that S&P 500 must struggle, okay, this thing happen or that should happen. So that's not needed, because once there comes a closing above the 606x, then it opens the door to the all-time high level, that is 6147. Okay, 6147. But this does not confirm or indicate, okay, that the S&P 500 will be in a condition to test the 6147, the all-time high, and will be able to make or build a new all-time high, because we are anticipating a fall somewhere in between 606x and 614x. Okay, once it comes into this condition, there comes a closing above 606x, then I will give the precise level from where we are expecting this fall. Okay, and then there will be a fall. But any fall from here in between 606x and 6147, this fall will be limited to the confluence zone. That's it. Okay, now there will be there is the condition. Okay, because as of now confluence zone is helping the S&P 500 to hold and sustain bullish. Okay, but again, whenever there comes two consecutive closings, if there comes one closing below the confluence zone, means we can expect bearishness for 2 to 3 days. Okay, if there comes two consecutive closings below the confluence zone, then we can expect a short term bearish trend, as simple as that. Okay, so when I say that one closing below means bearishness does not mean that necessarily there will be a closing below the confluence zone. No, it means that it can try to move up, okay, but it will retrace. Okay, there will be bearishness, and then it can close at or above the confluence zone. Means there will be a red candle, but it can still close at or above the confluence zone. That is why we need two consecutive closings. Okay, doesn't matter whether it happens on Monday or Tuesday Wednesday, or whenever it happens. Okay, one more thing, in order to lose the confluence zone, okay, there is a condition that there must come a sharp or heavy fall in the S&P 500. Then only we can expect that the S&P 500 will lose the confluence zone, otherwise it will not be. Okay, means if you notice, like for example, there comes a fall, then bullish movement, then fall, the momentum is low, limited. In that case, it will not be able to lose the confluence zone. No, that's not possible. Okay, there must come a sharp and heavy. Yes, there is a condition that there may come, means it will also be expected if there comes an open below the confluence zone. Okay, and it try to move up, but it fails and remains and closes below the confluence zone. That will be the condition where we can say yes, because the open was already, okay, below the confluence zone. Okay, so that it is there. Now let me tell you once again that 5907x is a part of the confluence zone, and this also includes some of the 5906x, the confluence zone. Okay, but the exact numbers of the confluence zone are very well known by my Patreon community members. Okay, this means that confluence zone is everything. Okay, as long as it is holding and sustaining above the confluence zone to 606x, one closing above the 6600 this x, okay, then it will be heading to 6147, but then it is expected to fail or to fall in between these two. Okay, now once there comes one closing below the confluence zone, then in that case we can expect bearishness or pressure in a manner that for next 1, 2 or 3 days it will remain under pressure, but that does not confirm that there will be a fall. Once there comes two consecutive closings below the confluence zone, then more fall, heavy fall, and short-term bearish trend we can expect. Now question is that if the S&P 500 loses, okay, this is the confluence zone, then what will be the next that will help the S&P 500 to hold and sustain? It will be the heavy support zone that starts from 585x. This zone, it starts from 585x, has historically helped the S&P 500 to hold, sustain, to recover, and to trade bullish. Okay, again the rule of two consecutive closings below the zone that starts from 585x will be applicable. Only when there comes two consecutive closings below the zone that starts from 585x, in that case we will expect this gap to be filled. Okay, so there is a gap. Okay, this gap will be filled around 5000. What was the high? 5720.10. This was the high on 8th of May. Then this gap we can expect to be filled. Okay, when there comes two consecutive closings below the zone that starts from 585x. Okay, this means that confluence zone is everything for the next week. Okay, bullish, bearish. One more thing you need to understand that but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. Okay, now so I was telling this is the important thing. Okay, what we know is that S&P 500 is now in a condition to give a bullish reversal, a bullish retrace on Monday, as early as on Monday. Because if there doesn't come a bullish retrace on Monday, if there comes one more red candle on Monday, then there are very good chances that the K equal to D equal to 0 will be seen on Monday. This will be the absolute saturation in the bearish side. This absolute saturation can trigger more or heavy bullish movement in the S&P 500 on Tuesday, okay, Wednesday or so. This means that if there comes K equal to D equal to 0 on Monday, okay, then Tuesday during the testimony of the Fed chairman, doesn't matter whether there will be up down movement, bullish or bearish, doesn't matter, because eventually there will be a bullish movement. In that case, that will be the condition most likely. Okay, but once again, it will depend on that on Monday. If it is closing as red, then where is the closing? Either if it is at the confluence zone, or above the confluence zone, or below the confluence zone. Okay, but again, what we know is that as soon as there comes one this is the condition, K equal to 0, this means, especially in the bullish trend, okay, then this is more than enough to trigger bullishness. This means that yes, this is the only condition that can actually trigger a gap up open. A gap up open. See, everything is indicating bearishness. Everything is indicating a gap down open. All of the technicals, the candles are indicating gap down open. The only condition which is allowing a gap up open, or this the bullishness, initial or intraday bullishness, is the K equal to 0 condition in the S&P 500. This is very, very important. Okay, so how it is going to work means, if there comes a gap up open, then what will happen? Then it will move up, it will remain, it is most likely it will remain above the confluence zone, but intraday it will test the confluence zone. It will test, sustain, and then will move up. Okay, so now there are these three things. Okay, confluence zone is there, and confluence zone is there, then 6006x is there, then the zone that starts from 585x is there, confluence zone, and the 6006x. This is not actually a zone. 606x is not a zone, it is a level. Simple, it is a level. But this one and this one are the zones. These two are the zones. But guys, once again, remember, it is the Dow Jones that is creating a problem for the S&P 500, for the entire market, and not the S&P 500 itself. Other than that, if the situation does not improve, there comes a bearish slip in the Dow Jones, the moving averages, then doesn't matter what the S&P 500 is doing, doesn't matter. Okay, there will be a fall or a heavy fall. Then the confluence zone won't be able to restrict, won't be able to hold the fall. Okay, then there will be this zone, and then eventually the gap that was there at 5720.10. Okay, this was the high, okay, before the gap was seen. So then this gap will be filled. So now once again, it all depends on the confluence zone. But guys, whatever is going to happen or whatever will happen, I will keep you posted. I will keep you updated through these daily precise updates of the S&P 500, the Dow Jones, and in a manner to the entire market. Pre-market analysis, midday update, final update, and then the midweek update, the video technical analysis, then the stock market opportunities. Okay, so if you want to join my Patreon community, then I've given the link in the description of the video and also in the comment section. So guys, if you have any questions that you want to ask, then you can ask your questions through the comment section. Okay, and once again, hit like if you have liked this video to appreciate, and your appreciation matters a lot.